Welcome, everyone. Listen to me very, very closely because what I am about to tell you could save you thousands of hard-earned dollars in your retirement. So many of you are working 30, 40, or 50 years, paying into Social Security with every single paycheck you ever earned. You sit there, and you think, Susie, when I finally retire, that Social Security check is mine, tax-free. But then tax season rolls around, and you get hit with a shock that makes your jaw drop. You realize that Uncle Sam is standing there with his hand out, taking a cut of your Social Security benefits. Are you kidding me? You paid taxes on that money when you earned it, and now you have to pay taxes on it again when you receive it? That brings up so much fear and anger for so many retirees. You ask yourselves, how in the world can they tax my Social Security? How much are they going to take? And what am I supposed to live on if my income gets eaten up by taxes? I hear your frustration, and your fears are completely valid. But fear comes from not knowing. When you know the rules, you hold the power. So let's break down the truth about taxes on your Social Security benefits, plain and simple, with zero fluff. First, do you automatically owe taxes on your Social Security? No! Not everyone pays tax on their benefits. In fact, nearly half of all retirees don't pay a single dime in federal income tax on their Social Security. But whether you owe taxes depends on one very specific formula that the IRS uses, called your combined income. How does the IRS calculate your combined income? Write this down. Take your adjusted gross income, that's your pensions, traditional 401k or IRA withdrawals, dividends, and any job earnings. Add any non-taxable interest you earned, like interest from municipal bonds. Then, add exactly 1/2 of your annual Social Security benefits. That total number is your combined income. Now, here are the thresholds you need to memorize. If you are single, and your combined income is under $25,000 a year, congratulations. You pay zero federal tax on your Social Security benefits. But if your combined income is between $25,000 and $34,000, up to 50% of your Social Security benefits become subject to federal income tax. And if your combined income is over $34,000, up to 85% of your benefits can be taxed. If you are married filing jointly, and your combined income is under $32,000, you pay zero tax on your benefits. If your combined income is between $32,000 and $44,000, up to 50% of your benefits are taxable. And if your combined income goes over $44,000, up to 85% of your Social Security benefits can be taxed. Now, hear me clearly. That does not mean the government takes 85% of your money. It means up to 85% of your benefit amount is added to your taxable income and taxed at your regular tax bracket rate. That is a massive difference, but it still hurts if you aren't prepared for it. So, what is the actionable takeaway here? What do you do right now to protect yourself? Number 1, manage where you draw your income from in retirement. Standard withdrawals from traditional 401(k)s and traditional IRAs count directly toward your combined income. But qualified distributions from a Roth IRA or Roth 401(k)? They do not count toward your combined income. Tapping into Roth accounts can keep your combined income low enough to protect your Social Security from being taxed altogether. Number 2, avoid sudden income spikes. If you sell a stock or take a huge one-time lump sum withdrawal from your traditional IRA to buy a car or remodel a kitchen, you could accidentally push your combined income over the threshold, triggering taxes on 85% of your Social Security for that entire year. Plan your big withdrawals strategically across tax years. Number 3, prepare for tax withholding so you don't get hit with a penalty at tax time. If you know you will owe tax, fill out IRS Form W-4V with the Social Security Administration. You can ask them to withhold 7%, 10%, 12%, or 22% directly from your monthly checks so there are no ugly surprises. Knowledge is financial power. Don't let the IRS catch you off guard in what should be the best years of your life. Take control of your income streams today, keep your combined income in check, and protect every single dollar you worked so hard to earn.